Hey guys, it's Jenny Silver, and today I want to talk to you about the EIDL Advance Grant. The EIDL Advance Grant is coming back, you guys. With the new stimulus bill, we have a new redefined version of the EIDL Advance Grant. Now, the EIDL is the Economic Injury Disaster Loan. This is an SBA loan for those self-employed and small businesses that have been impacted by the pandemic. Now, the loan itself is not a forgivable loan. You do have to pay the loan back. However, if you qualify, you may be eligible to receive up to a $10,000 advance grant. The grant does not have to be paid back. You can receive the grant even if you are not granted the loan or if you do not accept the loan. So you want to make sure to know if you qualify, because if you do qualify, you could potentially receive up to $10,000 in a grant. So first off, you guys, I want to go over exactly who qualifies. Now, this has been retargeted in the current stimulus bill. If you qualified last time, there are different sets of qualifications this time. Additionally, if you received the grant last time and you received only $1,000, you may be eligible, if you meet the requirements, to receive the additional $9,000, all the way up to the $10,000 maximum for the advance grant. First off, you must be self-employed or own a small business. This includes sole proprietors, independent contractors, small businesses, including LLCs, or any other form of business entity. You must have been in operation starting January 31st, 2020 or earlier. Your business must be directly affected by the COVID-19 pandemic. You must employ no more than 300 employees. Can you have no employees? Yes. Prove that you have had a 30% decrease in revenue between those two corresponding 8-week periods. And you must be located in a low-income community as defined by the IRS. So most likely, you know if you are self-employed, you know if you own a small business. You also know how many employees you have. You also can consult your own financial records to track and see exactly the percentage of income loss that you have had. However, defining if you're in a low-income community is going to be a little bit trickier. So I want to break that piece down for you so that you know if you qualify for this new round of EIDL advance grants. First, we need to define low-income community. We're going to do this according to the IRS publication, which defines what a low-income community is. This was established by an IRS code established in 1986. It states that for low-income community, it means any population census tract if the poverty rate for such tract is at least 20%. So that's the first way you can qualify. So you need to take your business address, your self-employment income address, basically what is defined on your tax return as being the location for your business. And you need to determine if that location is in an area that has a 20% poverty rate or higher. Or in the case of a tract located within a metropolitan area, the median family income for such tract does not exceed 80% of the greater statewide median family income. So what the heck does that mean? I'm going to show you. I'm going to show you how you can figure this out. So first, you're going to want to go to the website that I have linked in the video description below. This website inputs all of the census data and it is up to date, and it is recommended by the SBA to use this website. You're going to type in your address for your business address or your self-employment address in the address bar, and you're going to click search. Once that search pops up, you're going to click on the view demographic data bar. Next, you're going to see a little box that looks like this. If you click on the income information here, you can locate right here that you can see the percentage below the poverty line. You can see that the percentage below the poverty line in my area is just below 8%. Therefore, I would not qualify. Why? Because I'm not at that 20% or above minimum. Next, we're going to look at the tract median family income percent. You can see here that mine is 174.43. That would not qualify me. Why? Because you need to be at 80% or below. The last way to qualify, because I didn't meet qualifications number 1 nor 2, would be to look up your state median family income. That is going to be doable through Google. All you have to type in is the name of your state and then median family income. I'm in California. In California, the state median family income is $91,377. Next, you are going to take your specific tract, your specific location median family income from this chart, and you're going to divide it by, on a calculator, the state median family income. That is going to let you know if you are below that 80% mark that would qualify you. In my case, I am not. Now, if you are not certain about this and you want something to tell you exactly if you qualify or not, there is a company that has developed an app for this. This is a for-profit company, so they're doing this in order to earn income based on ad revenue, etc. So keep in mind what I'm linking here. I'm not endorsing personally, and it's not a government program, but I wanted to share this with you just in case you wanted to join this app. This app can be found at helloskip.com. Next, let's talk about the requirement that you must meet to prove that you have had a 30% decrease in revenue between those two corresponding 8-week periods. The bill states gross receipts of the covered entity declined during an 8-week period between March 2nd, 2020 and December 31st, 2021, relative to a comparable 8-week period immediately preceding March 2nd, 2020 or during 2019. So if you qualify, great. Let's talk about what you could possibly receive. Under entitlement of full amount in the bill text, it states that if you are qualified, you shall receive a total of $10,000 under Section 1110C of the CARES Act. It goes on to state that you will receive this amount regardless of if you, number one, qualify for the full loan, number two, accept the full loan, or number three, have previously received an additional loan or EIDL advance. But if you did already receive an EIDL advance during the first round previously, then you will be entitled to receive the difference between what you received before and the $10,000 cap. So that means previously in the first round of EIDL advance grants, if you had just one employee, yourself, you would have received $1,000. If you had 5 employees, you would have received $5,000. Under this new legislation, you can receive up to $10,000, and it is not determined based on number of employees. So if you received $1,000 the first round, this time you would be eligible to receive up to $9,000. So you guys, if you're in a low income community, if you have 300 employees or less, if you're a small business or you are self-employed in any way, and you have verifiable self-employment income on your taxes, because yes, you will have to submit documentation, and you can prove that you have had a 30% loss of gross receipts, then make sure that you are checking the website that I have linked down below to see as soon as the EIDL grants go live. Is the SBA currently administering the EIDL advanced grants and accepting applications for them? No, they right now have not reopened the possibility to get an EIDL advance grant. Why? Because the stimulus bill was passed and the SBA is still implementing the changes, updating the system, etc. So as soon as it goes live once again and the EIDL is available to be received, I'll be sure to post a video letting you know that the EIDL advance grants are back. Okay guys, I hope that was helpful. Please click like, subscribe, and be sure to leave me a comment down below.